Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 9th of February. Starting off with Cloudbreak Discovery, where finally, after many months of consolidation, mostly in the 1.5 to 2 pence area, we seem to have had a breakout. Positives here are the bullish divergence line, which has been in place, I suppose, since October, November. Shares have bounced up above that on the RSI indicator there. And I suppose the key here has been the break of that August resistance line, just around 2.1 pence. Above that, looking for a minimum of 3.1 pence, which is a July resistance line projection. If you're the fan of the shares and want to dream of greater things, then it could be up to 4.5 or even 5 if that rising trend channel that I've just drawn is actually where the stock actually is in or on the trajectory of. But 3 pence initially, and then up to 5.5 maybe by the end of next month, something like that. Interesting situation with East Imperial. Shares seem to be still rather bogged down, but the the volatility is completely dried up. So there's a chance of the shares actually starting to get going again. Need to break 10.5 pence, maybe on a weekly close basis. So not too much to ask, and then if we can do that, maybe a retest of last month's resistance by the end of this month could be on the cards around 12.75 pence. But just interesting that volatility very flat there, so that tends to mark the end of any extended move, as this has been down from 20 to 10 pence. Requested stock now coming in the form of Europa. Here you can see that the shares, despite all my different lines and everything else, managed to back down from a bull trap through the old September peak. That was at 1.9 pence. So ideally, you could just wait for 1.9 to break and then hope that the shares will then head off to 2.1, and then the designated target, near-term target over the next couple of months, maybe as high as 2.8. What we probably don't want to see is any lasting price action back below either the floor of that January gap, which is actually, there were actually two gaps to the upside, which was very encouraging. If we can get away with no fill of the gap or no end-of-day close back below the gap, then one would be quite confident that the stock could head up to 2.83 pence, which was where the shares were back in March last year. So down but not out there as far as EOG and the recovery argument. Moving on to Galileo, which I think was one of my stocks of the year. Here it looks like finally the shares have decided to believe that scenario. We have third attempt at breaking 1.15 or 1.2 pence. This looks quite encouraging now. We've got a broadening triangle there from back in the spring, so the June resistance line projection heading for 1.9 pence, and any end of day close through 1.15 should be the trigger for a potential move up to that area. We've seen a lot of the mini miners recover, and it looks as though Galileo is one of those in the frame. You can also see we've broken that line of resistance from September at 1.1, so that's another sign of confidence for the bulls at the moment. Another Colin Bird situation is Jubilee Metals, which, as usual, came up with a stonking update yesterday. This has also broken a line of resistance, in this case from May, and also the 50-day moving average. We've gapped through the 50-day line, and we've broken the gap day, which the back gap day high, 16.3. That should mean that we at least head up to the top of that rising trend channel from August at 18, 19 pence. Given how long it's taken for Jubilee to move around in the months, probably wise not to come up with too many time frames or too many targets. But 19p by the end of this month seems to be not too ambitious. And we also have the backing of that bullish divergence line from August, which the shares have bounced off many times, suggesting that there is momentum now. But the big win here, the gap higher through the 50-day line, is a decent signal for technical traders and investors. On to Ironveld, which has had a good go at breaking to the upside yesterday, come back a bit now, but looks as though the break of that resistance line there from November was the proper signal. A bit of jiggery pokery around 0.9, but at least while we're above the 0.9 area, looking for the top of that broadening triangle from back at basically this time last year, heading towards the 1.6, 1.7 area. and that could be seen as soon as the end of next month. Bonanza, the magic word for miners, and that's what Oriole has done today. It's been rewarded by an 8% rise. It may be a bit stingy in terms of the market doing that, but we already had the shares with the technical buy signal breaking that line of resistance from June at the beginning of last month, so maybe somebody was guessing the good news was on its way. All we want to see now really is a break of that January peak around 0.46 pence. But it looks as though the shares are already on their way up after that trend line break from last month, and we've also actually got a new trend line break and a break of the 50-day moving average at 0.37. So initial target here up to 0.5 and the 200-day line. Then obviously after that, one can hope for 0.75, 0.8, which is post-June resistance. This stage only really well below 0.35, delaying the upside scenario. I'm still amazed by Premier African, just on the basis that it's had a sort of hellish consolidation of the best part of a year from end of March to now in that very irritating 0.15 to 0.25 range. We've broken out of that range with we've had bullish candles for the whole of this month to date, which is quite an achievement. You don't see that very often. That implies there's plenty more gas in the tank, and it also implies that this is a mid-move consolidation, not the end of the line for the shares. Minimum on the upside here up to 0.41. And if you're a fan of the shares and want to dream of dizzy heights, I would suggest that the target here could be as high as 0.6 over the next couple of months. An end-of-day close through 0.34, which has been the latest February high. Should do the trick for a new leg to the upside. The other positive here is the way that we've got both the 50 and 200-day moving averages rising. They're rising towards a golden cross probably over the next week or two. And the golden cross, the run-up to a golden cross, traditionally the strongest part in the cycle, which I suppose is already evident from the run of blue candles there, or blue bars. So very impressive indeed after so long. Moving on to another stock which seems to be rehabilitating itself and actually accelerating. Very similar breakout after a long consolidation that we had. We had an initial target here for Predator towards the 12 pence level, which obviously now looks more than achievable by the end of the month. The other point to note is we've got this sort of W-shaped reversal, extended W-shaped reversal, which is looking very healthy indeed. Don't get many of those. That has its neckline at 7.8, so above 7.8, we're looking for the upside to continue, and that could be actually as high as the resistance or support on the way down, which was around 14 pence. So 12 to 14 now we're looking for, while we're above the 200-day moving average at 8 pence, which seems to be a decent prospect. But the main highlight here really the extended positive reversal formation there for Predator. Onto a stock or a company I interviewed yesterday, and so far we've seen UOG come up with the goods in terms of the bulls' expectations. We had a bullish divergence line there from back in September, bounced off that to start this month, which is always a healthy sign. And the view is that while we're above recent support around 2.1 pence, we should at least head back up to 3.5 pence and that September resistance line projection with that bullish divergence line, and maybe also some appreciation of the latest interview. Moving on to a stock which is relatively obscure but has its fans, I know, Woodbois. Here, it was interesting. I've been following this for a week or two. We had that sort of one-day bear trap, which is below the 3.8 pence level. That seems to have been the sort of the final flush out of the weak hands on this stock, and breaking that line of resistance there from back in April. Basically this week, and the 50-day moving average at 4.25 does suggest that we're going to head higher. Initial target here obviously up to 5.2 pence, which is post-August resistance, but there's the top of the gap there at 7 pence for the shares from May, and that could be the target maybe as soon as the end of next month. All the while we want the stock to remain above 4 pence, which is recent support, so looking pretty decent there. Finishing off with Extract Resources, which basically Took about six attempts to get through the 6p level. Finally doing it this month, breaking that March resistance line, 5.85. And we've had a reasonably smooth progression since. The ideal scenario here is that we head to the top of a rising trend channel from the beginning of last year at 10.5p, and that might be seen by the end of next month. It is positive, I suppose, that we've finally broken out of quite an extended range between 3 and 6p for much of the last year. So the implication is that you'd have a 3p upside, of which we've already had a penny so far. That's it for me today. More updates tomorrow.